Hello and welcome to the day ahead. It is Thursday, October the 13th. I'm Andrew Gagan. Global equity markets eased overnight. On Wall Street, trade was choppy ahead of the key inflation read to be released tonight. The S&P 500 was slightly lower as Fed minutes showed policymakers agreed they need to maintain a more restrictive policy stance. Energy and consumer staples led the gains while utilities and real estate dragged. And PepsiCo was the first company out of the gates for earnings season, with shares in the soft drinks maker jumping after raising its annual revenue and profit forecasts. And in Europe, Credit Suisse fell on reports that the US Justice Department is investigating whether the Swiss lender helped US clients hide assets from authorities. Well, US producer prices increased more than expected in September, but there are signs the battle against inflation may be turning. The producer price index rebounded 0.4% last month, above the 0.2% consensus forecast. Excluding food and energy, the core index rose 0.3%, while the core annual growth was steady at 7.2%. Services accounted for 2/3 of the increase. However, underlying goods prices posted their weakest reading in close to 2.5 years as supply chains improved further. And the consumer price index will be released tonight. Minneapolis Fed President Neil Kashkari has said he's not seen much evidence yet that underlying inflation is softening, and therefore he can't see the bank retreating from its inflation fight, saying a much more likely scenario is we'll raise rates to some level north of 4%, maybe 4.5%, then pause and sit there for an extended period of time while the tightening we've already done works its way through the economy. Well, that stance was echoed in the minutes released from last month's Fed policy meeting, which emphasised the cost of taking too little action to bring down inflation likely outweighed the cost of taking too much action. Meanwhile, the British government borrowing costs have surged against the Bank of England telling pension funds there that they had 3 days to fix liquidity problems before the bank ends emergency bond buying. 20 and 30-year gilt yields both hit their highest since 2002, passing above 5%. US Treasury yields eased, the 10-year down to 3.9% and the 2-year is 4.29%. And major currencies, they were mixed against the US dollar, the pound strengthening by 1%. The Aussie dollar did close just below 63 US cents. And the Australian share market, well, it is expected to move lower this morning. ASX futures down close to 1/3%. Global oil prices fell for a third day. Brent crude down 2% as OPEC cut its outlook for demand growth this year. And iron ore futures fell around 1%. Base metal prices were mixed. Aluminium up close to 4% on reports that the US is considering banning Russian aluminium. And spot gold added around 0.5%. Bitcoin is slightly higher. And on the data front, US CPI, that will be released tonight. That is the day ahead. We'll see you again tomorrow.